Welcome. It's distribution day for Group D. Overall, looking at the distributions, of course, I only look at the single stock ETFs, as those are what I cover for now. We'll add the weekly shortly. As far as some of the short funds, I don't necessarily cover them now. I can add some dialogue for those as well. Although the reason I don't cover them is because I have a compare option, which, for example, if I go to NVIDIA here, I do like to compare just how these strategies are working from a non-reinvest dividend, and just if someone avoided YieldMax altogether and just owned the equity outright. And the weekly ones, a lot of them are in a ET or a diversified approach with several different options, so it's hard to really do a compare function there. That said, I'll do something similar. I'll do the distribution history, price plus the cumulative distribution, which I find to be very good options as far as viewing the overall performance of the fund since inception date. But the inverse funds are also out there. I don't necessarily cover those, but I'll look to add those in the future. But enough with that. I guess jumping back into the YieldMax Group D. Overall, I guess if we go to the site here, we just filter based on Group D for the single stock ETF. And as I always like to do, if we filter based on percent return, this is the monthly percent return. So the recent dividend announced divided by the recent ETF price. It's not an exact figure. It's just something I like to use, relatively how they're paying relative to what they cost. Of course, when the ETF announces the dividend, it will cause the ETF price to go down by the dividend amount. So it's basically, if you get a really high dividend, your ETF amount will decrease. Some people could argue, don't pay a dividend at all and just let the ETF price rise. But essentially, you're doing that if you do a reinvested dividend option. But most of these people own them for income, so I do like to see the dividend. But as far as what the dividend is, frankly, I think the YieldMax team can basically just pick what they want, just with the knowledge that they want to keep the ETF price somewhat stable. Otherwise, they don't want to see immense NAV erosion with the ETF price. But that said, let's see, SMCY is paying out. I guess I should also say, though, some of the recent dividend is, in fact, funded by selling like those call options on a weekly and monthly basis. So some of it is nice to see a good dividend. Just in general, when they make money selling those call options, it does, as they sell them, the ETF price does rise. Then when they pay out, the ETF price falls again. So I just want to note, if they are good at selling the weekly options or they expire worthless and they do generate premium, if they don't pay out a huge dividend, it's not really the worst thing, because the ETF price won't fall by that much. The value of the ETF price will continue to rise. Anyway, that's just something I've been thinking about. But SMCY paying out the largest distribution, $1.31 as far as percent, 7.88%. MSTY, $1.09. I think that is the lowest, but it still is 6.35 of the recent price. The MSTY ETF price has been falling a bit as the Bitcoin kind of falls a little bit. That said, I've seen people liquidating their entire MSTY portfolio and moving into other options. I don't think I do that quite yet. I'm still of the opinion the Bitcoin train has a long road ahead of it, or a long string of tracks ahead of it. So that's just my personal opinion. But XYZY, that was actually at 4.23%, 43 cents, and a 1024 ETF price at the time of this video. AIYY, 12 cents. So there, with it trading at $2.81, that did come in at 4.19%. Then AMZY, just about 3.15%, aptly 2.58%, and DISO 2.48%. These are about what I would expect. With Bitcoin kind of underperforming, MSTY probably just wanted to maintain a $1 plus payout ratio, because I don't necessarily think they're synthetic lost money. They did generate some income on selling their weekly call options, but they didn't make anywhere around $1.09. So overall, they're letting the ETF price fall a little bit in order to keep their distribution above $1 a share. But in the future, I would expect or predict, I don't know, not a financial advice or anything, but just predict that might do better with time. Anyway, jumping into Group D here, of course, or maybe I should start with, so MSTY, it was above 5 billion or almost 5.5 billion, I think, in market cap. You can see with the fall, it's down to 4.9 billion as far as a fund size. And as far as Group D, I think the next biggest, so let's see here, SMCY, 340 million. And then I think AMZY is just about 300 million. So I'll probably take a look at those three, as they are the largest held, or the ETFs have the largest fund size. So starting with MSTY here, you can see the price plus cumulative distribution over time. Overall, a lot of people seem to be freaking out over MSTY, but you can see it hasn't been going up, but you can see since probably May or June timeframe, it's essentially been a flat investment from a total return perspective, because although the ETF price has been falling, the cumulative distribution's been adding up, bringing your total return to right around that 60 mark, assuming you start off with a $20 investment at inception date. So one thing I guess somebody could say is since December of 2024, MSTY's been a flattened investment, but it did rocket from September 2024 through the kind of the election up till the end of November. Basically went from what do we got there, like 30, between 35 and 40 up to almost 70. And then since then, the total investment returns stabilized around that 60 mark. From a distribution perspective, you can see that their distributions have been weighing down over time. The average, of course, with those huge distributions early on is still at $2.32. But yeah, I guess I think the Bitcoin, it's both fallen in value and kind of fallen in implied volatility. So your synthetics not necessarily making money, and you're not getting as much on a weekly basis for the calls you're selling because the implied volatility is down. But as with anything Bitcoin, I expect the volatility may soon be coming back. Just give it time. And then from an all variable, you can see, as I was showing, you can also, in that price plus cumulative distribution tab, you can also see on this all variables tab, the purple line, of course, is your total return. ETF price has been coming down, but the cumulative dividend keeps growing. So overall, it's been flat recently. So I guess people who own Misty, I wouldn't flip out. I think it has a brighter future out of it. And it still generates a good income for those who are looking for the income component. And from a comparison perspective, I guess here's if you just own strategy or MicroStrategy, you can see strategy's fallen, and the YieldMax option with not reinvest dividends has also fallen, but clearly not to the same degree as strategy. And your reinvested dividends option is coming back a little bit closer to non-reinvested dividends. But as far as how they're looking today, so I just pulled this, I believe this is updated for today. As far as the fund size, so if you go to here's today, you can see the market cap's fallen and the share count's also fallen. So you can see some of the people are indeed liquidating some of their Misty shares. That said, overall, it's still the largest fund by far. I assume many people own this have DRIP or dividend reinvestment. So I'd expect to see as they pay out the shares going up. So whenever the shares go down, you can tell for sure some people are definitely selling their Misty investment. From positioning though, they sell their synthetics. If you play around here, the share price right now on MicroStrategy, your strategy is $346.50. So all their synthetics, they start at $375 and they go, you can click the little button to show the red line, exactly where their synthetic falls as far as a strike price. I just make it so you can select one, so I'm not adding too much confusion to a screen that already has a lot of data on it. But yeah, their synthetic's definitely negative with the share price, which is roughly where this black line is below the synthetic strike. That's going to add as a negative impact to the fund ETF price overall. But as far as 829 strike price, they have stuff sold at $355 up to $372.50. But then they got the call spreads initiated where they buy the call options at higher strike prices at $375, going all the way up to $395. From a synthetic usage, they have the right to sell 139,615 contracts. Looks like they sold contracts against all of that except for 41,340, which they still have remaining, at least per my update. So they can still sell more of those to generate more weekly premium. Other ones they did sell, they got call options on 54,284 of those. So you got credit spreads employed on most of the call options that they sold, which I will restate again. I definitely prefer the credit spread approach than just selling the naked call options, because stock or underlying equity like strategy can rip higher quick. And I'd hate to miss out on all that upside. I don't mind missing out on a little bit of it, basically the distance between the call you sell and the call you buy. But if it really rips higher, I want to capture some of that upside in those really big weeks. So I think that is a good approach to use. It does cut your potential dividend amount, but I think that's a good trade-off in my opinion. So here's the ETF price. It's roughly $17.30, or let's see, it's $17.16 at the moment, but when I ran this, about $17.30. Looks like it's down a little bit today. But of that, they got more cash than their actual ETF value is. That said, they have a synthetic that they got carrying right now that's got like a negative $2.04 value that's on a per share basis. And the other contracts they have sold right now are acting as a negative 10-cent drag on the fund. So if the contracts expire worthless, that negative 10 will go to zero, thereby. And since this line here is basically the cash plus the other contracts plus the synthetic value, if this goes to zero, it'll push the ETF value up. But I got another graph that shows that below from a time series approach. But this is just like a snapshot of the three components that add into the ETF price. With that, I'll probably go down to this one. So here's a time series of the different components. So the teal line here is the ETF price. That's basically the final component. How it's constructed is if you add the blue line plus the yellow line plus the pink line, it basically equals the ETF price. So the one we're watching, I guess overall, you got the blue line, which is the cash they have on their balance sheet, not their balance sheet, but the ETF balance sheet at the moment. Since the last time they paid a dividend, you can see they went from $19.03, and from selling the weekly call options, they're up to $19.43. They could have also used their cash to restructure their current synthetics or the weekly contracts that they sell. But overall, this cash amount will generally go up because they're selling those weekly call options. So since the last time, 1903 to 1943, they made about 40 cents. So the $1.09 dividend, you can see that 40 cents of it is funded by the gains since their last distribution. And the rest of it, basically, they're just taking a hit to their cash value overall just to maintain that dividend above $1. Yeah, in my opinion. As far as why the stock's moving down, clearly the synthetic's been moving down as the underlying equity goes down. And then from the yellow line, that's just, it doesn't really move that much. That's just how much when they sell those weekly call options. So you can see between 822 and 823, they went from like negative 0.02 to negative 22. So in that one day, you can see they sold call options to make about 20 cents. And then as those expired worthless, their value went down to about zero again. I expect today they're probably going to sell some more call options. So you'll see this, assuming I update it tomorrow, you'll see this line probably increase negatively and the cash value should increase positively. So that's how those break down. But yeah, that's Misty. I'll jump through these other ones a little quicker. I know Misty's the largest fund, so I try to spend the most time there. SMCY, I did just update this. I got the in-depth so you can see their positioning. But as far as the distributions per share, SMCY, for those who don't know, it came out, or maybe I should go to the compare tab. It came out at about $50 a share. And then right off the bat, the underlying equity, here's the underlying equity, basically tanked. So the entire ETF fund tanked right off the bat. So overall, people, I believe, if you start with a $5,000 investment, I think all the strategies are down, even only the underlying equity. That said, recently SMCY I think has been pretty good, at least from a distribution perspective, based on where their share price is at. So it started, set that back. Got stuff falling down. Sorry about that, but it started at 50, but recently it's down to, it's below 20, but they're still paying out $1 plus dividends lately. So those who got in after the price fall or the price decline, I think have been doing pretty well. You can see this on the total return. I guess it went from 50 up to about 60, and then it really fell. Then your $50 investment went down below 35. But since then, it's battled its way back from a total return perspective from just under 35 up to about 40. The ETF price has gone down from 26 down to 16 as of somewhat recently, and the cumulative dividends have been growing pretty good. So if you cut off that first couple months, which you probably shouldn't do, but for those who are buyers of the ETF post their inception date, not the worst investment and possibly a good thing to consider going forward. From an in-depth perspective, how they're looking for the week ahead, you can see here, it's like loads from a positioning standpoint. SMCY, the underlying, is at $44.65. So it's about right where this black line is. Their synthetics are structured at 45 and 60. So the synthetic overall is a negative on the fund. And they have all their options really sold. They have some sold at 44. They have some sold at 44.50 and 45. So really, you're getting capped on your upside for the ones they have sold. And then they haven't bought again at 47.50 and 49. I'm just looking at their usage overall. So you are capped right now, but they still have 22,636 contracts that they can sell. So I assume they'll structure those at higher strike prices as the price of the underlying equity is somewhat close to where their capped upside is at the moment. Let me just grab a drink quick. And they are employing the credit spread method, of course. It looks like on almost all the calls that they have sold. If you add these two together, usually they have zero remaining capacity. So when I look at this and then this 67%, it would tell me 67% of the total they have sold. But since they still have remaining capacity, you can ignore the 67% until they have the remaining capacity down to zero, if that makes sense. But so that's what they're looking like on the synthetic usage from a fund makeup per share. As I said before, the synthetic is negative right now. Quite a bit, actually. I believe that the underlying equity took a little dip recently. But if that can battle back and get that synthetic value not to be such a drag on the fund, expect the ETF price to go up. But that said, you're capped on your upside right now on some of the things. I don't know, it's an interesting fund right now. I might stay away from it until next week if I was a new investor, as they're capped on their upside right now. So right now, you're probably just looking for it to stay where it is, and you only collect 13 cents. It does stay where it is. I guess the risk reward on that doesn't seem super great. We'll see what the team does as far as selling new contracts. But I just add this from a time series. We don't got a ton of data. But yeah, the cash position up slightly. ETF value went down quite a bit, but it's been going up a little bit as the synthetic's been recovering a little bit. Yeah, I'm just taking a look. And then from a perspective, here's kind of how the fund's looking from a percentage basis. How much the other contract sold is, what the synthetic percent is, and then what your cash percent. I don't really look at that a lot, just another way you can look at the fund. And then finally, just to jump into AMZY, I did make a video just covering this one in general. Not the worst investment overall. You can see the options between reinvesting your dividends and owning the underlying stock have been virtually the same, with the non-reinvestment option trailing slightly, but not a terrible investment. been performing pretty well. Their dividend, I guess, just reported 49 cents, slightly below the average, but pretty stable in the range from 40 to 60 cents. Here's how your total return's looking. You're just about at a high, so it's been performing pretty well. The current ETF price is in the mid 15 range. So you lost a little bit in ETF value, but you got a cumulative dividend of $16.10 from the inception date. And then from an in-depth perspective, you can see their entire synthetic is at the 220 strike. I have that tab in case it's a company with multiple synthetic strikes. You can see what percentages they have at different strike prices. But from a positioning perspective, Amazon's at 229, about where this black line is, shifted up a little bit. They are past the 227.50s that they had sold for the end of the week, but they got a lot of them sold at 232.50. And then they have them bought at 235 and 237.50. So that's what you're looking like for the week ahead. This one, you can see they do have all their contracts sold. There's no remaining capacity. So they're not going to be generating any more income from selling call options because their collateral is used up right now, which is provided by their synthetic. So they've sold 13,055 contracts, and they've also bought 13,055, of course, at a higher strike price. So they are 100% insured. And so if there is a huge run in the stock, you will be capturing upside once it passed that call option that they sold. And as far as how the fund's made up, cash and ETF value are somewhat similar. ETF value is a little higher because their synthetic is positive, 65 cents per share, because they have it structured at 220. Amazon, the underlying equities at almost 230. So clearly the synthetic on a per share basis is positive for the fund. And then I guess finally here, last thing to cover, if you're looking at the time series chart, not a lot going on. Synthetic's up slightly in recent days, caused the ETF to go up. Since their last distribution, their cash was at, I believe that's the last distribution. Yeah. The cash was at 1508. Now it's at 1502. So you see their cash position is actually down. As far as why that is, I assume they restructured their synthetic, or they had weeklies that got where the stock price ran by where the underlying stock ran by the strike, and they had to restructure them. I guess I don't follow it to that detail. I just like to follow the generalized metrics. But usually if cash value goes down, it means they had to restructure. When I say restructure the synthetic, what I mean is they move the strike price where it was initially at to something. In this case, if they're using cash, they would have restructured it to something that's higher to lower, because they're spending money to get a synthetic at a lower strike price. But so their dividends or their distributions clearly just going to hit their cash value, as they didn't necessarily make that money from selling calls on a total basis in terms of what their cash value is overall. But anyway, that's the Group D, MSTY, AMZY, and SMCY breakdowns. Other ones are available for Group D if you're interested. Like, for example, Aptly here. I guess I don't have that in-depth button. I got to add that. Apparently, I forgot to do that. But if you go to the Aptly details on the left-hand side, the tab, you can see, for example, how they're positioned for the week ahead as far as what calls they have sold, what calls they have bought, and their expiration date. So follow along as you see fit. But thanks for tuning in.